Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very beautiful half day of trading, and happy 4th of July to everybody for tomorrow. And in today's markets, guys, well, the S&P 500 and the QQQ pushing to new all-time highs. And this despite receiving somewhat mixed economic data over the course of the morning. Yes, we received ISM Services data, so a little bit of indication into services prices inflation. And number two, we also got some jobs data as well. So in today's video, we're going to go over those two economic reports that came out less favorable than expected this morning, and then dive into our normal technical analysis routine where we go over our major market indexes rundown, and thereafter our big tech names rundown too. And at the end of the video, guys, after some criticism that there are no more plays in the market right now, everything has just ran too much and there's no opportunities, well, I've put together a list of about 8 to 10 stocks that would beg to differ. Very solid companies that are currently on dips, which could present some very decent either swing trade opportunities or long-term portfolio adds if they are your type of company. So without further ado, guys, let's get right into today's video. SPY up a very healthy 0.45% again, and QQQ up a nice 0.83%, but financials and healthcare are other two largest sectors of the market, pulling slightly back. All in all, though, guys, it was a very decent day in the markets. Take a look at the heat map. You can see here that, yes, although big tech was once again responsible for a lot of the gains, especially your semiconductor names, NVIDIA and AVGO Broadcom, pushing up very, very high, with Tesla as well, another 6.5% for Tesla. Well, the rest of the market, guys, especially in terms of healthcare and financials, just didn't get the job done today. But all in all, a fairly decent day of broad market rotation other than these other two major sectors: industrials, energy, basic materials, utilities, and even defensives and some consumer cyclicals playing along in the mix today. Take a look at the one-day relative on the bar charts right here, and you will see, guys, very decent, healthy market overall, right? Yes, technology was towards the top of the list, but only a few sectors pulling back. And as we said, guys, that was really financials and healthcare, ever so slight, tiny pullback. And on the 1 week relative, guys, the market now looks a lot more broad than it did just a few days ago. Only sectors down on a 1 week relative is utilities, defensives, and healthcare once again. So all in all, guys, the market is currently broadening out, which is your best case scenario for your S&P 500 bulls, right? Don't want to all rely on tech all the time. So before we get into more technical analysis, guys, let's take a look at what happened this morning with our economic data. And we're going to go through these very, very quickly. So on Monday, we didn't cover this, but you can see the ISM manufacturing PMI came out less than 50, right? So less than 50, it does elicit that the market is kind of consolidating a little bit. The economy is contracting, but that is normal, guys. We've talked about this for a long time on the channel. It is a byproduct of high interest rates. Now, are these coming into dangerous levels of territory? No, not really. Just really standard. Just goes to show that the economy is pretty much flat or barely contracting right now, which is entirely normal in relation to the heightened interest rates. Now, today we did get the ADP employment change, which came in less than expected. This is a measure of private employment by companies, right? But the company that does this, ADP, is a private company. This is a survey. It's by no means to be an official government number, right? However, that being said, it did come in lower than expected. It's supposed to create 170,000 jobs in the month of June, and then unfortunately we've only really produced about 150,000, so coming in a little bit light. ISM Services as well. Usually we'd like to see a read over 50 to show an economy that is expanding, and this too has come in below 50, showing once again that the economy is contracting. So are there starting to be a few little tiny cracks here and there in the economy as a byproduct of high interest rates, people reducing on spending, and businesses reducing on spending as well? Yes. But are those cracks major flaws in the economy that need to be addressed right away? Not really, guys. Just really a byproduct of, once again, high interest rates for a very long time. And keep in mind, the first interest rate cut is going to come later on in the year, most likely in either September or November, closer to your election time. So let's get into these two reports and see what the damage was exactly. Well, number one, take a look at your ISM Services PMI at 48.8. Take a look at this graph right here. You can see that this is pretty much one of the lowest reads that we've had in almost a year and a half. As a matter of fact, the lowest read, and you can see it right here. They did label it on the article. Therefore, the June services PMI indicates the overall economy is contracting for the first time in 17 months. So definitely has to be notable to us, guys, but definitely nothing to cry home about, right? Just a slightly contracting economy. And you can see that pretty much all across the board, right? So overall services PMI, 5% change. Business activity heavily down now under the 50 mark as well. We did have a reduction in new orders, reduction in employment as well, but we'll take a look at the employment numbers, and they're really not that bad. Supplier deliveries, inventories are down substantially by about 9% month over month, and prices. This is the one that we have to keep an eye on, guys, because services prices have been more sticky than others. Those are the remaining contributor to inflation for the most part, finally trickling down. They continue to trickle down now, 3-4 months in a row. So really nice to see that your prices are indeed coming down. So all in all, guys, not a terrible report to say the least. Now let's take a look into an article that covers the matter. Soft ISM Services and rising jobless claims make case for Fed rate cut. S&P 500 rises. So obviously the market is exactly looking for this. They are looking for a weakening of the economy and a slight weakening of the job market to really light a fire under Jerome Powell's behind to get them to do that first interest rate cut sooner than later in order not to break anything, right? So let's take a quick look here. So while the survey looks bleak, talking about the ISM services data we just looked over together, keep in mind that the S&P 500 or the S&P Global Services Index. So this is put on by another company, right? ISM is just one company that does this type of report. There are, however, many others. S&P Global is another one who does this, and listen to what they said. They also released on Wednesday. They released their own survey, and it said that the ISM services rose to a 17-month high. 55.3 from 54.8 in May. S&P Global said the growth rate in June was consistent with 2.5% GDP growth. So the disparity reflects the different survey group. The ISM tends to survey larger firms and includes retailers. So in terms of that, guys, I would be more keen to take a midpoint between the two, right? So if we take the ISM services, which came out at about 48.8, and the midpoint the S&P Global report, which came in at 55.3, well, the average between the two, we can just call it about 52, right? So it shows the economy is roughly flat depending on which survey group you ask, right? So the moral of the story, guys, is the economy is not growing, right? We're not adding to that inflation, which is a good sign for the markets largely, still awaiting that first interest rate cut, however. Now, in terms of the jobs report, so ADP's May report didn't come close to the Labor Department's official total of $229,000 gain in private jobs. So once again, we have a disparity between the data. ADP saying we actually came in below the consensus and only added 150,000 jobs. However, the official government agency, the Labor Department, coming in with a total of 229,000 gains. And if you were to include government jobs, the government estimated 272,000 new jobs in May. So once again, guys, a bit of conflicting data. But one thing, guys, when we have conflicting data like that, it just goes to show one simple, very fact, right? And that is the fact that jobs right now are fairly decent. Now, depending on which survey you take, at least we are not losing jobs. And that is the moral of the story, right? Depending on whether or not which survey institute releases, 150,000 positive jobs, the Labor Department saying 272,000 jobs. Once again, if we take the midpoint between the two, it's still over 200,000 jobs in the most recent month, which is towards the weaker side of any given month, but still a very good number for an economy that is contracting right now. So full employment is still here, guys. Now, take a look at this right now. The unemployment rate is seen holding at 4%, while the 12-month rate for average hourly wage growth is seen dipping to 3.9 from 4.1%. So you may think that a dip in average hourly wage is a bad thing, but keep in mind, guys, as long as this growth rate is above the rate of inflation, which is roughly around 3.0, 3.2%, as long as you're earning more than inflation, that is good. The consumer is gaining purchasing power, and the employment rate at 4%, guys, 4% is really not a large number at all. It's towards the lower end of the last 15 years of unemployment. So all in all, guys, the economy, yes, although it's contracting ever so slightly, I see no major red flags in the data right now. And the jobs market as well. Even though the jobs market is slightly contracting too, people still have a lot of jobs. We have full employment, 4% unemployment only. That's a very, very good number. And we are still adding jobs on a month-over-month basis. So all in all, guys, even though there are tiny little cracks forming right now, is it enough to manifest a giant bear thesis of a massive recession? Absolutely not. And the Federal Reserve has the tools to prevent that. And that is going to be the focus of the next few months in terms of dropping the interest rates. So hopefully all of that made sense, guys. Now let's jump right into our technical analysis and look at these brand new all-time highs on the S&P 500. So S&P 500, guys, extremely healthy price action right now. We had a bit of a tightening range here over the last 2 weeks. And we were saying because of the more renewed broadness in the market measured by other sectors, we would not be surprised if this does break to the upside. And that's exactly what happened today. Tightening range into a brand new daily uptrend. Look at this, guys. Gorgeous new daily uptrend pushing to the all-time highs. So as soon as this new move on the daily tops out, how do you know that the move is topped out, guys? Just look for the loss of the hourly time frame. As you can see now, gorgeous hourly uptrend. If ever we were to lose that into Friday's trading or early next week, we'll just be looking for a daily higher low for further trend continuation down the line. At this point, anything above 543, this line right here is just going to be looking for that daily higher low for that trend expansion, building a very beautiful shelf of support right now at the 543 and respecting the heck out of this 12 EMA, guys. This entire rally pretty much since the early part of May has respected this 12 EMA. So that should be the first line of defense. And the first thing that if we lose, that should be notable because then that would mean that we're probably going to head into a bit of weekly consolidation. So far, no signs of that, guys. Weekly uptrend is absolutely gorgeous. So all in all, guys, no red flags whatsoever. QQQs looking absolutely gorgeous as well. Beautiful daily uptrend right now, and they just reset into another leg higher. So looking very gorgeous on this most recent portion of the daily uptrend, looking very good. As soon as this move tops out here, guys, let's say we top out on Friday or next Monday, tons of space now created. Anything above 476.28, just going to be looking for that daily higher low for the furtherance of the daily uptrend, looking extremely healthy, guys. No red flags whatsoever. We were looking for the capacity for the bears to set a daily downtrend and weekly consolidation in motion, and it looked like they really wanted to do it, but the bulls just putting their foot down and saying absolutely not. Gorgeous weekly uptrend currently in motion right now. No red flags at all on the QQQs either. Now, moving on to financials, the other sector that needs to make up for even just a slight bit of QQQ weakness that we haven't had. We would need to see XLF and XLV make up for it. So far, those two indexes, they're really just moving sideways, right? XLF, really no developments in price action pretty much over the last month at this point, right? Really stuck in this range. What are the bulls trying to do though? They're trying to reset into a daily uptrend. For that, we need a break of 41.84 to the upside. Daily uptrend will be underway. And then we can sufficiently say that our weekly higher lows are set and that we are pretty much looking for the potential weekly trend expansion. Get back above this red box, guys. We've really been congested in this area for the past month and a half, 2 months almost at this point. It's your previous all-time highs. What I would like to see the bulls do is really mount above this area, use it as support, and then launch, give us a new weekly leg higher, and really continue this monthly trend expansion north. And in my opinion, guys, as we get closer and closer to that first rate cut, financials are really going to start to run away with it. But all in all, right now, guys, no red flags to speak of whatsoever. The bulls actually look quite healthy, whether you're measuring on the monthly, on the weekly, or even on your daily time frame. So we'll keep a close eye on this one, but so far, so good. Moving on to healthcare right now. Healthcare with another big dip on the day today. Take a look at some of your big names in healthcare, pulling back all of your major players, right? Eli Lilly, MRK, AbbVie, UNH, your largest players in the healthcare market have been pulling back now for about 2 weeks, and it really shows in the index right now. So unfortunately, the bulls, loss of the daily uptrend right now. Not a daily downtrend yet. Daily downtrend, you would need lower high into lower low. And as you can see, guys, pretty much just a waterfall drop for the last 7 days of trading. So what are we looking for here, guys? Well, first things first, I would be looking for short-term oversold conditions. We're not there on the daily yet, but we're really approaching there on the 4-hour. You can see 4-hour oversold conditions. And even on the shorter time frames here, guys, we've been kind of teetering into the lower oversold conditions as well. So looking for a bounce. Are the bulls need to get it done pretty quickly, though, because we're going to be wanting to measure the size of the move, right? As soon as we start that daily bounce, how do you know that the bounce is underway? Once again, keep an eye on your hourly trend chain shift. As soon as we get that, we need to measure the size of the bounce. And the size of the bounce, guys, will be in relation to 147.42, this area right here. If we can get all the way back up, let's say to about 145, that sets up the bulls nicely to be able to reverse this into a new daily uptrend. So far, though, the bears in short-term control of this chart. And even on the weekly here, guys, size of the weekly, yes, we do have a little bit of space still, but it's getting pretty dicey, right? 140.72, the cannot area, the cannot lose area for the bulls, because if you lose that, you lose the weekly uptrend. So far, they do still have a little bit of space, reacting nicely from the 26 EMA. We will see if they can hold up this price action over the next few weeks. But guys, as long as QQQ and XLF are holding their own, then healthcare can consolidate a little bit more and then proceed to rally thereafter. Really not that many red flags on the monthly. If we take a look at this, because on the weekly it looks kind of messy, on the monthly, guys, just a very tight range at the above the previous all-time high. So I really don't see any major red flags in healthcare, just a little bit of consolidation, right? Healthcare does this. You can see it's consolidated here for literally 2 years almost. So healthcare has ran significantly depending on which name you measure, but can still have a little bit more into it towards the second half of the year. Now, moving on to semiconductors. Give me a very brief second. So semiconductors finally lifting off here today, 2.27%. And as I said, guys, this ETF right here, SMH, has 25% NVIDIA exposure. So obviously when NVIDIA and Broadcom, the other largest name in the index, have 4% days, this one is definitely going to fly. That being said, new daily uptrend by the bulls, looking very, very good. So now we've created a decent amount of space. Anything, as soon as this move is topped out, any move lower, going to be looking for a higher low, anything above 256, looking for that daily higher low for the eventual trend continuation. Target the higher end of this prior zone of resistance right there. Should be newfound support for the bulls. And the 12 EMA, I know you can barely see it because I drew all over it. 12 EMA is sitting right there as well. So all in all, the bulls looking very healthy. That leads us into our potential weekly trend expansion too. So now that the bulls have recaptured the daily uptrend, we are going to be looking for this weekly trend expansion. Weekly higher lows are now set with that daily uptrend. 254.80, guys, is going to be the line in the sand level that the bulls cannot lose, looking for the continuation of this beautiful weekly uptrend. I was looking for SMH to maybe pull back into the 248 level around this 12 EMA. Unfortunately, just didn't get there before putting in another leg of rally. So far, so good. We will keep a very close eye on this one in the event the bears are able to clobber the bulls over the course of the next few weeks. But as of now, daily trend breakout is looking good. Weekly higher low is looking good for that further trend continuation. And my favorite play in all of semiconductors right now is still ASML because of their monopoly status, because of their relatively low valuation, even at the all-time highs, and because we are looking for this monthly trend expansion phase right now, looking extremely, extremely strong on all time frames, like weekly breakout, monthly breakout, and even the daily, looking for the daily breakout of your all-time highs. Moving on to IWM. IWM still doing absolutely nothing is the Russell right now. So I'll remind you, we are in the context of a daily uptrend right away, and we are looking for that trend expansion. That would need a break of 204.58 to the upside to really get the bulls some legs and start attacking the higher levels on the weekly that have posed a bit of problems all throughout 2024. On the weekly, looking fairly good, trying to go for that extra weekly leg up. However, if interest rates don't cooperate and interest rates remain high over the course of the next few weeks, maybe 1 month, 1 month and a half of trading, I really don't expect IWM to break up. Maybe we just get a tightening range around the tops here. I still do maintain, though, that if ever this one was to fall off a cliff with broader market consolidation and we revisit the lower 190s, I think it's a tremendous swing trade opportunity. As of now, guys, though, no real trade for me, just kind of an in-between, right? Kind of in between two levels, midway between the highs, midway between the lows. So really just tightening up right now as best as it can, right? So looking not too bad on the Russell. Now, moving on to the last one, Dow Jones. So the Dow Jones also not looking too bad, 0.06% to the downside. However, the bulls are doing a great job of holding these levels. You can see last 2 weeks of trading fairly muted. We really need the breakout above 39,500. If we can get that in motion, guys, daily uptrend is reset anew. We're now above all our moving averages, which is good. And we're also consolidating above our most recent resistance, which is now support too. So all in all, the bulls are looking very good for this trend expansion. Especially if we continue to get more momentum to the upside in the SPY and the QQQs. All in all, the Dow Jones not looking too bad. No red flags on the weekly as well. Well, it is a weekly trend expansion right now, but it's kind of weak, right? Very, very slow, especially measured against a type of move like this, right? But all in all, guys, on the technicals, it is a technical weekly uptrend, and we are targeting the top end of this range, 39,900 for the eventual break of the all-time highs. Not looking too bad at all. As a matter of fact, even if we pull back anything above 38,000, guys, just going to be looking for a weekly higher low to potentially get this two-step or reset process in motion. Huge level for the Dow Jones is still down here, guys. 38,600 down to about 38,300. Really no red flags, if ever, or rather until we lose that large area. So the bulls not looking too bad, all things considered. Now moving into Apple. So Apple, what a day for, or what a week for Apple so far. It's been another green day to the upside, looking extremely strong, right? So now I'll remind you what was the case for Apple. So Apple, beautiful move to the upside after the AI event, and then daily downtrend. Now daily uptrend has been reset. So we'll focus on this most recent price action right here. Beautiful daily uptrend. As soon as we get a little bit of a pullback, just looking for a higher low, anything above 210.25, looking for that daily higher low for the further trend continuation. Now looking very good. We're above our all-time high resistance, 217. So if we pull up even more, this could be a little retest area before jumping even further for Apple. No red flags whatsoever. The bulls in control of every single time frame. Monthly control, beautiful weekly control, new weekly leg in motion right now, and even the daily too. So looking extremely, extremely good here, guys. Personally, myself, I would need to see closer to about 210, 207 to start playing Apple for some swing trades once more. Now it's just kind of starting to run away from us. So if you're holding shares, this is a hold for me pretty much. Can't really be a buy up here, a little bit too high, and also not a sell because we're really not anywhere near overbought daily conditions on Apple, looking extremely strong. Moving on to AMD. AMD, one of the better opportunities, in my opinion, in the market right now, trying to get this daily uptrend underway. Desperately need a break, guys, of 166.52. If we can get a break above 166.52, daily uptrend is set in motion. We are now healthily above our moving averages, which hasn't been the case, guys, pretty much over the last 3-4 weeks of trading at this point. So nice to see us break above the moving averages. What I really need to see is a break and close above that 166.50 level, because then we would finally get above this big red box of resistance that we've been playing around with now for about a month and a half of trading. So AMD not looking bad at all. As a matter of fact, they have tons of space, anything above 153.90 on a pullback, just looking for a daily higher low for the continuation of the trend expansion. And now this one kind of looks like Tesla used to look, right? The nice little shelf prior resistance right here. Hopefully the bulls can use that as support and then launch another daily leg higher and really start getting some motion on this weekly trend breakout, right? As of now, it's been really, really flat, slow weekly trend break in motion right now. For the weekly official uptrend continuation, need a break of 175. Give me that break of 175 and it's going to look really juicy for continuation into our higher levels, 181 and then all the way up to pretty much $200. AMD looking very, very solid right now. But if we continue just messing around in this lower area right here and pull back again, you guys know I've been playing short puts, 155 down to 150 pretty much for the last month and a half of trading, and it's been a very successful endeavor so far. So even if we do pull back, guys, going to be some nice entry opportunities back here once again in the lower 150 range. Moving on to Amazon right now. So Amazon pulling a little bit back on the day after some rumors, or not some rumors, but a fact that Jeff Bezos is going to sell 25 million shares of Amazon. That may seem like a large number, right? 25 million shares of Amazon at $200 each. That is $5 billion worth of Amazon, right? Now, we will see when that sale goes through. As of now, we just have a filing for that sale, right? So Jeff Bezos trimming his holdings once again. That has been the case in point for the last 3 years since he stepped down as CEO, guys. You can't blame the guy for taking a little bit of money off the table and pretty much going on to do other business ventures, right? So that being said, that news could bring down the stock a little bit more. And just keep in mind, guys, nice daily uptrend right away. So what we're looking for here, guys, looking to protect these daily higher lows at 192.52. Any move lower into that location, trying to find a daily higher low for the further trend expansion. We really can't break and close above that 200, right? It's proving to be a little bit tricky. That being said, if ever we lose this area right here and lose the daily uptrend, go into a little bit of a daily downtrend, no problem at all. You guys know how solid this area has been, right? This whole 190 down to about 185 location, super juicy location. And even on the weekly, you see it best, right? Big resistance right here. If we do pull down ever so slightly for a couple weeks of consolidation after some news like that, no problem at all, guys. This could be a very nice breakout retest of that resistance before running a bit further in terms of Amazon looking extremely strong. So if we do pull back a bit more, I will be buying some more stock down here between 190 and 185 for a little bit of a swing trade opportunity. But as of now, the bulls retain full control of this chart. So once again, monthly full control, weekly full control, and daily still full control as well. Moving on to Google right now. Google, another green day as well, 0.42% to the upside. And this chart pretty much kind of looks like Amazon as well, right? Had a nice little shelf above here, resistance for about a month and a half of trading, finally breaking above it and now putting in motion a new daily uptrend. So daily uptrend still remains underway. They broke to a new all-time high ever so slightly by a few pennies today, but you got to give it to them. So as soon as this move is topped out, going to be looking for that daily higher low. Anything pretty much above at this point, 183.11, just going to be looking for that daily higher low for the further trend continuation. Looking very strong is Google. And even on the weekly, guys, the bulls have put in so much space between now and the prior weekly higher lows right here around 171.50. So even if we get just like Amazon, even if it rolls over and gives us further consolidation, maybe for a week or two, no problem at all. Anything above 171, guys, just looking for that weekly higher low for the further trend continuation. And this is going to be the area that I'm watching once again, 179.50, just because it was resistance for about 4 or 5 weeks of time. So should be a first nice line of defense for your bulls. Looking very strong is Google. Now moving on to Meta. Meta, quickly, I mean, Meta and Amazon, for all intents and purposes, guys, probably my favorite two bets in the market right now in terms of big tech, just because of their valuation and their future growth prospects, not in terms of business growth, in terms of free cash flow and profit margin growth. So Meta looking extremely strong even today, even though they were flat, not giving back too much to the market at all, still in a very nice daily uptrend. We have a nice little double bottom section right here. So remains to be seen, guys. Meta is going to do one of two things over the next 1 week of trading. Either we're just going to continue this daily uptrend higher by pushing above this location right here, 521.59. That would just be daily trend continuation into a little bit of all-time high resistance, right? That's what we're dealing with overhead. But in the event that we lose these lows here, guys, 493, right? Lose this, set a daily downtrend in motion, no problem at all. Take a look at the weekly. Weekly control is all for the bulls right now, looking very strong. Weekly, gorgeous uptrend. So any pullback, anything pretty much above 455, just going to be looking for that weekly higher low for the further trend continuation later on in the year. Looking extremely strong. If we do revisit this 482, 480 level, I will definitely be buying more shares of Meta. Bulls in absolute full control, and the fundamentals are so gorgeous on the company. I mentioned them pretty much every single video right now. PEG ratio at 500, about a 1.23. Free cash flow is absolutely ridiculous, and it will be continuing over the course of this year. Take a look at this ridiculous free cash flow they put in last year, and it's going to just continue building and building and building, and those juicy share buybacks are going to continue as well. Now, moving on to Microsoft. Microsoft setting another all-time high in motion, $460 for Microsoft, but we did the valuation here at 443 pretty much. And it was kind of high, right? When we did the video a couple weeks back. So Microsoft, even though it's one of the strongest companies in the market right now, I don't believe it is the best valued big tech name out there. That's why I say Amazon, Google, and Meta are much better value propositions, right? But this stock is just so strong. Daily uptrend in motion right now, looking very good. As soon as this new move is topped out, just going to be looking for that daily higher low. Of course, anything pretty much above 446, just going to be looking for that daily higher low for the further trend continuation. Now, if ever Microsoft decides to roll over and take a little bit of a breather with the rest of the market, you guys need to know anything above 405 on the weekly, just looking for a weekly higher low for further trend continuation later on in the year as well. This could be a juicy area, guys. Prior all-time highs, the 12 EMA sitting right there. That's about 435, 430. If we do revisit this area, probably going to be adding a few swing trade positions to Microsoft for that juicy trend continuation. No red flags to speak of. Now moving on to Netflix. So Netflix as well, putting in another green day, but Netflix price action kind of muted, right? All good though. They are very close to the all-time high right now, guys. If we get a break above this 690 resistance, they are getting very close to the all-time high, which is $695, $700. Looking extremely strong. The company's fundamentals have never been better, arguably either. And we did the valuation here at 684 just 2 weeks ago. PEG ratio of about 1.62. That is next to nothing, guys, right? Very cheap for a company that's still at the around the all-time highs right now. So all in all, the bulls looking very strong, defending this 12 EMA. Look how well Netflix has defended this 12 EMA pretty much since the lows after their earnings back in the late late month of April, right? So looking very, very strong are the bulls right now. Keep an eye on this level right here, though, 662. Get a break of 662 to the downside. Daily downtrend, unfortunately, would be underway, and we'd be in for a little bit further weekly consolidation. The bulls have tons of space, anything above 627. Just looking for that weekly higher low for further trend continuation. This one also kind of looking like Amazon and Google, right? Hesitated here for a couple of weeks, pulling back into this location right here, trying to back test our prior resistance as support. The 12 EMA should be catching up too. So this location right here, 655 could be a juicy little swing trade opportunity for that eventual continuation into the all-time highs. No red flags on Netflix to speak of, looking very, very strong. Now moving on to NVIDIA, give me another quick second. And let's get into it. So NVIDIA, strong day today, 4.57%, but that was not always the case, right? So they started off the morning very muted for the first about hour of trading, and then NVIDIA just doing NVIDIA things, pretty much just blasting off to the top. So very, very strong chart right there. We were looking for the bears capacity to potentially break these lows, send us into a daily downtrend, and continue the weekly pullback a little bit further, maybe into the 112.12 EMA right there. Unfortunately, the bulls had other plans for the stock, now trying to break above and give us our daily uptrend back. So looking very strong. If we get another green day on Friday, daily uptrend is started once anew. The bulls have done a great job defending this tiny little support area between roughly 119 and 115, looking very, very strong. And if ever we do get that daily trend breakout on Friday, you guys need to know your weekly higher lows are set, and we are looking for another weekly leg higher on NVIDIA. We'll be keeping a close eye. Can they break the all-time highs, or will they maybe fail the all-time highs and maybe get plunged into a little bit of a range of consolidation similar to the one we had back here in the last, pretty much over the course of last summer, right? That would not be surprising because NVIDIA's valuation right now, it's getting a little bit high. It's still very manageable, right? If we take growth at about 20% on EPS for the next foreseeable future, right? 2.5 peg. If Wall Street is correct, right? Which I have my doubts about. Will they be able to keep up the growth? New competition entering the market as well, right? If they're able to keep up the growth, then even at 135, guys, NVIDIA is relatively cheap, which is crazy to think about. But if we take my more conservative estimate about growth, about them not being able to keep up the price of their chips so high for so long, and also new competition entering the market, if we take a more conservative ratio, then the PEG is sitting at about 2.5, which is on the higher end of things with Microsoft, but still nothing crazy, right? So NVIDIA can potentially start retesting these levels and maybe even break all the way above to about 150. A lot of analyst targets are sitting up there at about 150, which pre-split would be about $1,500. So very, very strong performance on the day. Moving into Tesla right now. Tesla, another super strong day on Tesla here, guys. 6.54%. Tesla quickly approaching the area that we were targeting on the chart, right? We were saying that the next area of resistance was roughly 255, 265, and we're pulling up into that location quite aggressively right now. Looking extremely, extremely strong here, guys. Is the pain for Tesla finally over? I really do believe so, guys. I really don't think we're ever going to revisit these lows that we had back here in the month of April. You know, even at this point, the 180s seem so far out of reach. We're going to need an absolute disaster on Tesla earnings or a really big reduction in EV demand, even further than we currently have, to plunge Tesla back to these levels. So seems as though the bottom is in for Tesla, looking extremely, extremely strong. Can I buy it up here though, guys? For the continuation of the rally? Not really. It's just not my style, right? 84 RSI right now. So as soon as this move has topped out, and it may be topping out soon here, guys, coming into the 255 resistance, right? 4 hour, completely blown apart, 90 on the RSI. So as soon as this move tops out, guys, so much space for the bulls. Anything above 180, just going to be looking for that daily higher low for the further trend continuation. Now, where could we pull back to? Well, happy you asked the question here, guys. Take a look at this level right here. It's been one that I've been watching for a while. So that's the closest level that we have in terms of prior resistance, right? We can even put a little, if you guys want me to make a little box, maybe that's going to be clearer for you. So we can put a little bit of a support box right here. And as you can see, we're kind of coming on top of it right now. So if we do start pulling back from this move, let's say Friday's momentum continues, clip the 255, and then we have a little bit of a sell down. This location, 240 down to about 230, looking very, very strong. Why? Well, it's prior range of support. support right there, and also going to be retesting, back testing this big downtrending channel line that's been in effect pretty much since the midpoint of last summer as well. So about a year's worth of downtrending channel to deal with here. That would be the likely scenario. Just a little bit of a retest of this channel and maybe further trend expansion, looking extremely strong on the weekly as well. Tesla, gorgeous weekly trend breakout right now. So much space for a little bit of pullback into this location right here, and maybe continuation of the run, bringing us into the higher 265 and then 280, and then obviously your infamous $300 levels. Tesla still relatively far off the all-time highs, 41%, but until their fundamentals catch up to what they were back here, probably not going to be revisiting them, but going to be some juicy swing trade opportunities. If ever we consolidate a little bit, guys, I will start playing Tesla a little bit more aggressively now that the sentiment in the stock is better and Wall Street is finally starting to increase their price targets. Now moving on to lastly, Palantir. So Palantir also not looking too bad, 0.08% to the upside. Palantir just trying to roll over maybe for a little bit of consolidation, but that is fine. Daily bulls, full control. Daily uptrend is nice. Any pullback looking for a higher low, anything above 24, guys, looking for a higher low for further trend continuation. Maybe target this 12 EMA as a first touch around the $25 mark, potentially for some further trend continuation. However, if Palantir bulls lose it and lose the daily uptrend on the weekly, that will be a juicy swing trade opportunity, guys. Gorgeous weekly uptrend right now. Any pullback going to be looking for a weekly higher low, anything above 20.6, weekly higher low for further trend continuation. If for some reason we pull back here, I will be writing short puts, guys. Let's call it 2350 down to 22 all day, looking for that weekly trend continuation and even the monthly trend continuation up into the $28 level at a certain point over this year. I'm very confident that PayPal will be able to attack and possibly even break above the $28 level this year. So all in all, looking very strong. Tough for me to get it up here. I'd be more keen to wait for a little bit of a dip and maybe start playing it, as I said, guys, $23.50 all the way down to $22 short puts. So that's pretty much everything in terms of our technical analysis for the day. Now, in terms of swing trade or long-term investment opportunities, the markets have run a ton. There is no more opportunities in the market, people say, right? I see that every single day, whether it's on message boards, in other videos, in comment section of other videos as well, right? Well, is that true? Well, guys, we're going to go through, I'm going to take you through about 8 to 10 plays right now that would beg to differ. All very solid companies, great balance sheets, expanding EPS, expanding revenue, and great free cash flow for the future. There are a ton of opportunities in the market right now, despite what some people might say. Number one, take a look at Berkshire. Maybe some of you have not seen Berkshire for a while. Warren Buffett's company, right? They have been pretty much range bound now since the month of February, and we're attacking the lower part of this range right now. Such a juicy long-term investment opportunity or swing trade opportunity, in my opinion here, guys. 405 down to about 395. This location, even from here, guys, starting a position, really not that bad of an endeavor. If you're looking to swing trade it, well, the stop loss needs to come below the low right here. So you're looking at about $10 worth of risk. And then obviously we're taking it all the way to the all-time highs, about 425, right? So $10 worth of risk, $20 worth of gain on such a solid company like Berkshire, guys. I'm going to take this one pretty much every single time. Gorgeous trend on the weekly too, right? Such a beautiful tightening range at the top. And even on the monthly, guys, just a tightening monthly range, looking for that eventual trend continuation to the upside. Looking very strong, guys. One of the best names in the entire market, still on a nice little dip buying opportunity. Moving on to company number 2, talk about this one often on the channel as well. Vici, my favorite REIT, right? Real Estate Investment Trust. They are pretty much a landlord for about 75% of the casinos on the Las Vegas Strip. Now, they do have other casinos as well in Atlantic City and things like that. But all in all, Vegas is their business, guys. And I was in Vegas 2 weeks ago, and let me tell you, it is absolutely booming. And that even in the hottest months of the summer, looking very strong, pays a 6% dividend at the current rates right now. And the only reason this company has been relatively weak is just because of a byproduct of higher interest rates right now. But as you can see, guys, the net margins of this company are fantastic, and the EPS growth is there. The revenue growth also is there. Their leases are all indexed. They own all the properties that they manage pretty much. And the leases, the rents are indexed to the rate of inflation. So they're not losing any purchasing power in the process. gorgeous area of consolidation here, guys. Their fundamentals are much better than they were in March of 2022 right now, and we're at the exact same share price. The company is very, very strong, so I will continue building a position in this lower location right here and just dripping the hell out of my dividends pretty much, right? Every single time I get a dividend, just reinvest it for more shares, and eventually, when we do manifest this little rally that's coming, it's going to be a very profitable endeavor. Stock number 3, taking a look at Mercado Libre. Mercado Libre, a stock that doesn't get talked about a lot. They are pretty much the Amazon of Latin America, even though they don't like to be called that. They're basically a mix of, you can think of, it's a mix of Amazon and PayPal. So not only do they have a massive retail business in Latin America, the likes of Amazon, right? I did a big portion on it in their last earnings. They're such a strong company here, guys, but also they have a fintech arm. They are the fastest growing fintech company in Latin America. They have almost a dominance on the entire market in terms of fintech, guys. They do pretty much retail lending. They do credit cards, peer-to-peer transfer, stuff like that. And it's a very high margin business for them. Company's looking extremely strong, guys, expanding their net margins as well. Revenue growth is crazy. EPS expansion is very, very solid as well. Look at this EPS expansion, guys. Absolutely ridiculous revenue growth as well. Such a solid company, and coming down into my dip buying opportunity, 1560 all the way down to roughly 1500. Such a sweet location for the company. Look at the PEG ratio at 1630 when we did it the other time. 0.92 for a company growing this much. 0.92 PEG, right? So definitely a huge opportunity. Just picked up a few more shares myself. A few other swing trades, guys. These need no introductions. Visa and MasterCard. Been talking about these for the last 2 weeks, right? Gorgeous 3 months of consolidation, right? Usually when we have a couple months of consolidation, that's the most we ever get out of Visa and MasterCard. Their fundamentals are so good. It's a blessing to find these stocks on a 4-month a little bit of a 4-month pullback, right? No red flags to speak of. Monthly uptrend. This is just healthy monthly consolidation, pulling back into our previous all-time highs. 12 EMA is right there on the monthly as well. I love this location for Visa. 265 down to about 248. I will be buying that opportunity all day. Moving on to the next one, MasterCard, same thing, right? These two companies have almost the same fundamentals, same thing. Gorgeous monthly uptrend, pulling back into that 12 EMA, looking for the monthly higher low for the furtherance of the gorgeous trend continuation that MasterCard has always had in the market, right? Very, very solid companies on juicy buying opportunities right now. 445 down to pretty much 426. I see no problem at all picking up some shares down there, whether it's for a swing trade or just to add to a long-term portfolio. Another company that's been on a significant dip this year has been McDonald's, right? Legacy company. Everybody knows this one. Tagging the 200 weekly moving average. How often does McDonald's tag this 200 weekly, guys? Just tell me, right? Since 2008, how many times? 1, 2, 3 can be argued. 4 with COVID, and now number 5. And every time we come down here, usually it does have a pretty significant bounce. So McDonald's looking very good, even though they are part of the consumer discretionary segment, guys. The guidance is still very good. McDonald's is such a strong company. People will continue eating at McDonald's no matter the status of the economy, right? It's known as one of the economy's more cheaper brands to go to. So if anything, people will just eat there consistently, right? So EPS expansion over the next 3 years, revenue expansion as well, looking extremely strong. McDonald's, McDonald's net profit margins, I don't know if you guys know, but they have 30+% net margins, guys. Company is doing fantastic, right? Just a little bit of a slowdown due to negative consumer discretionary spending sentiment that's been pretty much in the news for the past, let's call it about 2-3 months at this point. Super juicy area of support right now for McDonald's, guys. 250 all the way pretty much down. Even if we come down to 232, guys, this is an ad in my book all day if you like McDonald's. Such a juicy swing trade opportunity, right? If a swing trade opportunity, the stops can go really close below the lows. You're risking $4, right? $4, and the upside could be pretty juicy as well. TP1, 261, take profit number 2, 276, and then we let the rest ride. So risk to reward is definitely there, right? Just looking for maybe a monthly double bottom before maybe further consolidation and then an eventual trend resumption, maybe into the later part of 2024. But McDonald's looking like such a juicy swing trade opportunity, guys. Another one we're going to take a look at, Louis Vuitton. I talk about this stock a lot on the channel as well. Louis Vuitton's fundamentals are fantastic. Obviously, the company needs no introduction, but what you guys may not know is that they are a conglomerate of over 80 different luxury brands. It's not only Louis Vuitton, right? So they are one of the largest companies in the world, $380 billion market cap, and nobody ever talks about them, guys. Juicy dip buying opportunity right now in my sweet spot. Every time we come down into here, lower 150s, in the 140s even, I am adding to this position, coming into the 200 weekly moving average. Same thing. Look at this 200 weekly moving average, guys. How many times have we tested it since 2016? Not that many. And every time we do, we get a nice little rejection, and just continue trending higher, right? So even though this is part of consumer discretionary spending, it's really not. Rich people do not lose money in recessions here, guys. Take a look at your EPS expansion, gorgeous EPS expansion, revenue expansion as well. Company has very decent net margins for what they do being a retailer, right? Very decent net margins, 15, 20% net margins, looking extremely, extremely strong is Louis Vuitton. So I will continue to add to my position right here because the long-term trend is definitely in our favor. This company is going nowhere. And if anything, guys, juicy opportunity to just hold this one over the long term and just let it do its thing. Now, the next one we're going to look into, guys, Pepsi, another super solid company coming down into a very juicy area of support. Take a look at Pepsi as well. A few of the technical levels, right? 200 weekly moving average, same thing. Look at Pepsi, guys. Pepsi, every time we've come down into this 200 weekly moving average, it's always been a good buying opportunity in the past. Fundamentals are very, very strong for the company. Take a look right here. Oh, excuse me, that's the technicals. So take a look. EPS expansion, despite consumer discretionary slowdown. EPS expansion, yes. Are they being hit a little bit in the margins because of running out of pricing power? Yes, but they're doing very good cost control as illustrated in their most recent quarterly earnings. Very, very strong company. If we're coming down into here, guys, 160 down to 155, really, really tight range, right? The drawdown is not that severe in my opinion. Even if we were to retest 155s down here, such a juicy swing trade location in my opinion. Just really looking to pick the lows of some of this monthly consolidation that we've been having in this lower portion of the section right here. Take a look, guys. The 50 monthly EMA as well. If the 200 weekly didn't convince you enough, we'll take a look at this 50 monthly moving average too. Always a decent buying opportunity for Pepsi, in my opinion. Looking very, very strong, even though it's been out of favor. Usually when companies are out of favor, guys, in terms of the overall macro, that's when we should be building positions in these super strong companies. Dividend is really nice. So if you kind of missed the rally on Coca-Cola, the difference between these two companies, other than net margins, is really not that much, guys. Coca-Cola just has better net margins, right? 28% net margins for Coca-Cola. And in terms of Pepsi, Pepsi has never had the margins that Coca-Cola has had. They only have pretty much, 11 towards 12% net margins. All in all, though, still very, very strong company. Now, another company, guys, because there's so few deals out there, right? Another gorgeous company to be had is Canadian Pacific, Kansas City Rail. So these two railroads merged, and now they pretty much have a semi-monopoly on the North American market. Their routes run from Canada all the way down to Mexico, guys, and they pretty much have a monopoly on the business that they run. The management team for this company is extremely solid, and look, we've been caught in a range for pretty much the last 3 years of trading. The range, 3 years of trading, yes, but what have their fundamentals done since 2021? Well, take a look. 2021 EPS was right here, and now look, we're about to hit that expansion curve. 2021 revenues were here, and now look, about to hit that revenue expansion curve as well with the merger between these two companies. Looking so strong. Look at these net margins here, guys. Net margins pretty much 20 all the way to 30% for a railroad company. Such a solid stock. Look at the long-term chart, guys. You can't tell me this is a little bad long-term chart, right? Looking very, very good. Even right here at about $80 range, I would not be opposed to building more of a position. I have a bunch of shares accumulated in the lower 70s. If ever we retest those, I will be considering buying even more of those down here in the lower levels. But in my opinion, guys, it's just a matter of time before this one really starts breaking out of the monthly. They're actually trying to do it right now throughout the rest of the year. So looking extremely strong. Then we have a couple semiconductor pairs that need no introduction, right? SMCI. All the semiconductor plays have ran away, right? Not really. SMCI still relatively close to our support level right down here. 765 down to about 750, right? Decent little swing trade location. The risk is very small. Your stop loss would go below here at around the $700 mark. So we're risking about $50 per share, but the expansion could be beautiful. Take profit one would be about 1,000, and then we ride it all the way up to the all-time highs potentially. So beautiful consolidation here. On the weekly, it looks so good, guys. Tightening weekly range in this just looks like ripe for a potential bull expansion. And even on the monthly, guys, right? found the monthly higher low, and now we're potentially going for that monthly trend expansion. And at 770, I mean, we're a bit higher than that right now. Let's call it, we're about 10% higher than that right now. About a 1 peg for a company like SMCI. Such a juicy swing trade opportunity, in my opinion, too. And the other one, guys, we go through it all the time, right? AMD. AMD also has not benefited from much of the semiconductor rally over the course of the past 2-3 months. Also a very decent swing trade opportunity. The stop loss can be very, very small, guys. 153. So we're risking literally $10 to the downside. And then we have TP1, which could be about $12 to the upside, and then targeting even higher. Think maybe the high 180s, 190s, right? So it could be a very juicy swing trade opportunity with a tight stop loss on AMD. So those are two semiconductor plays that are currently, you know, very, very strong. Even ASML, we brought this one up earlier on the channel. ASML going for the all-time high breakout as well. I am in this one personally, so there are definitely lots of opportunities out there. Another company we can take a look at, guys, Expedia, right? Expedia needs no introduction either, looking very, very strong, pulling back into our area. Huge prior resistance level, acting as current support for the bulls right now, trying to get that weekly trend change in motion, really trying to get this monthly trend expansion going as well. Not looking too bad at all, right? Even though we have had a little bit of a mishap right here, looking to get it back together is the company. And all in all, guys, expanding fundamentals, expanding EPS. Look at this EPS expansion, very, very aggressive, right? And even revenue expansion as well, looking very, very strong is Expedia too. So that's another swing trade opportunity. Potential stop loss goes below the lows, 107, and then we're targeting obviously 158 to the high side. All of your analyst targets, guys. Look at these analyst targets, 145 up to about $200. Only one single person sitting down here at about 118. That's another one, guys. Another one, I keep bringing this one up all the time on the channel. Fortinet, one of my favorite cybersecurity companies, currently still in a monthly accumulation phase. PEG ratio at about 58 is not that bad. Take a look at these fundamentals too. Fundamentals, gorgeous EPS expansion, gorgeous revenue expansion, and contrary to a lot of other cybersecurity companies out there, they have really good net margins, guys, about 20-25% net margins. No worries for the company whatsoever. You know, same thing, can be a very, very tight stop loss. $57 is the stop loss, and then we're targeting this area right here, 70. So the risk to reward is very, very juicy on these companies, and even a company like UPS, guys, this is the last one I'm gonna show you guys, right? Even a company like UPS, very, very tight stop loss swing trade opportunity. Company's been crushed as of recently, but look at these FedEx earnings that came in pretty much over the course of the last couple of weeks, right? FedEx coming in with huge earnings, saying that the cyclicality of the business is finally turning around and they're finally getting back to growth. So UPS, in my opinion, should follow unless something is terribly wrong with their business, which when we took a look at their quarterly earnings, last earnings, it really wasn't. Just a little bit of cyclical nature of that business, a little bit of shipping slowdown, right? No problems with the company whatsoever other than that. Take a look, EPS resuming to that expansion curve, and even revenue as well. Revenue coming back up nicely too. So all in all, UPS could be a very decent swing trade opportunity just as well with such a tight stop loss, right? We're kind of coming into this previous big area of prior all-time high resistance, now acting as newfound support. We can have a very, very tight stop loss if we want to try to take this trade, right? Because obviously it could pull back down into this level right here, about the 125 level. But if we wanted to take a swing trade from this one, look how tight we can keep the stop loss, guys. Take it from here, stop loss goes pretty much below 132.85, so barely risking like $2-3 a share, and the upside potential coming back into this area right here, about the 147-150 range, is quite substantial, right? So looking very, very good on that swing trade opportunity for UPS as well. So those are pretty much about 10 different companies, maybe even more, that we went through just to show you guys, right? And I have so many more that I can show you guys. But it just goes to show there are still a lot of opportunities in the market right now. And we haven't even talked about the ones that are like obliterated, right? Like Nike, Starbucks, Intel, stuff like that. Those I'm being a little bit more patient with. But the ones I showed you have pretty much no fundamental issues whatsoever. The companies are doing fantastic. They're just not, they haven't just ran as much as the S&P and the QQQs this year pretty much. So hopefully you guys appreciated that video. Tomorrow I will be dropping a video on energy. We're going to be taking a look at some of the strongest stocks in terms of the energy sector, namely more specifically electricity and nuclear powered stocks, which have been on an absolute tear recently. So tomorrow we'll be uploading that video. If you enjoyed today's video, however, consider dropping a like, would appreciate it for the growth of the channel. Second, guys, if you haven't subscribed to the channel, I would love to see you back here for another one of these videos, guys. We do these every single Monday to Friday after the close, so hope to see you back with us soon. And lastly, guys, if you have any questions at all, please feel free to leave me a question in the comments. Anything you want. If you want me to look at a stock, some technical analysis, an options play you want a second opinion on, not financial advice, of course, or macro discussion, anything you guys want, leave it down below in the comments, and I'll get back to you in 24 hours. Take care, guys. I'll see you tomorrow in the video. Take care. Happy 4th of July again, and peace.